All right, before we get started, I need to go through the disclaimers. I'd like to welcome everybody. There's only just a few of us tonight. If it's just a few of us, I'll make sure everybody can turn the mics on. You can just ask questions away. This is Wednesday evening, 9:30 p.m. We're going to go till probably about 10:30, 11 o'clock. We'll see how the wedge alerts go. And right now we have an active alert with the British pound US dollar, and we're going to take a look at that one. But before we get started, we just have to go through the disclaimers. And trading foreign exchange is on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trade room. We will take trades looking at the live charts. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. Now we have all that out of the way. Let's get started. I'm going to change my screen here, if I can find it. Share screen, and we're going to be looking at the British USD. We had an alert at 9 o'clock. That's just about half an hour ago. And it's still trading inside the wedge. And so I drew this wedge. Basically, it was alert. It was a descending wedge on the euro, on the British USD. And so I drew my vertical line for where the wedge alert was. And before we get started here, if you have any questions, put questions in the question and answer section. I'll look for the chat, but I prefer to see it in the question answer. And since there's only a few of us here tonight, I'm going to allow all of you folks to talk. And so just get on your mics and just ask questions. I'll be more apt to see that as I'm looking at the charts. I don't always catch the chats and the questions. It looks like it just could be a couple of us here tonight. So having said all that, let's get back to, we get the alerts on reference to a 15-minute chart. So I start with a 15-minute chart and I put my my alert line where it is. It was a descending wedge. So I start my trend line from the A. I use this triangle tool. Before we get started, how many people are relatively new to this method of trading or new to this room? If you're new, raise your hands, or if you've been around for a while, that way I can, okay, we just have a couple new people here. Okay, good. All right, so I don't want to be too redundant for people that already know some of the stuff that we're doing. But we start with the wedge alert where I put a dotted yellow line, and it's descending wedge. So I start with a pivot high, and I bring that all the way down to near where the alert is, and I do the same thing from the bottom. I try and draw a trend line that has an anchor and a hit in the middle. Now the A to C does not have any hit in the middle, but if you look real closely at this BD line, as I spread this out, you'll see I have a little pivot low right here, and then I have, so I use that for my anchor, and I have a hit of the trend line. I have it, so from here, anchor, here's a hit. So this confirms this trend line. If it breaks this trend line, we're gonna be looking at taking it short. If it breaks the upper trend line, we're gonna be looking at taking it long. I mark these dotted lines to show where the potential targets are going to be once it breaks through the wedge. And I wanna make sure that I have at least 7 pips range to at least one of these two lines, because we're only going for 7 pips. That's our target. Now, as this thing gets closer and closer, you can see that it bounced off the bottom, it bounced off the top, and it's just getting itself tighter and tighter as it works its way out to the point of this wedge. Once it breaks, we should be able to get into a trade, and we should be able to get our 7 pip target from and say it breaks right here, we still have our just barely our 7 pips to the bottom where this D level is. So we have to keep that in mind as we do this. I draw the wedge on a 15-minute chart, and then I go to a lower time frame and I fine tune it. I go all the way down to a 1-minute chart, and we're going to tweak this all the way down here to the very peak low. Move this over to the high just before where the wedge alert was. I try not to put any of these A, B, C, or D points on the right side of where the wedge alert was. I try and draw the wedge prior to where the alert was, because that's the information that the algorithm is giving us for where these breakouts are. And I have my other point here. So here's where the anchor, here's a hit. And actually you can see we have another hit on the other side of where the wedge alert was. So that's a good sign that this is a pretty strong line for taking the trade. If it breaks through the bottom, we're looking at coming down here for our first target. And right now I'm looking to see, this is a key area, this 31, 34 area. That's a key reference point on a price line. And you can see that's right now we're right at the apex where this trend line and that fib line is intersecting. If it breaks at this area, we may have to, that may be a good indication that this is a good trade to take. But we also want to take note about how strong the move is. And we use relative strength moving averages to help us with that. And I like to, we have with a relative strength index, I have two overlaying values. One, the orange one is an 8 period, the blue is a 3 period. And as they cross and as they point in the same direction, I like to see them break out of the this middle zone here. This is the upper blue line is an 89%. This is 60%. This is a 40%. And then all the way down here, the bottom is a 11% retracement. So I like to see them come out of this middle zone, the 60-40 zone, and come on up, and then we expect a hook up here at the top, at the apex of the move. But right now it's in the middle of the wedge, and there's really nothing to do at this point in time. And I see Christine is in the room. And Christine, if you don't mind me making you a panelist, I would appreciate your help tonight to help see if we can, you can help me keep an eye on the chats, if you would be so kind to do so. Glad to have you here tonight. We have a small group tonight.
Yeah, sure, of course.
No thanks. Thank you, Christine.
Took me a moment. I was trying to. For some reason, it disconnected me and reconnected me. So.
Well, yes, because I moved you over to being a panelist. That's why.
Oh, okay, gotcha. Okay.
Yeah.
So, of course, I'll certainly let you know.
Thank you.
Do you just want the chat or chat and Q&A?
You can just you can watch the chats in the Q. Okay. Well, I'm asking for the chats in the Q&A. If they do it in the chat box, you can keep an eye on that as well. I've got them both
sure.
up, but preferably the Q&A would be the choice.
Okay. No problem.
Okay.
Got it.
Anyway, so right now this thing looks like it's trying to. One thing about this time of the evening, 9:30. Sometimes you get some good moves, but more often than not, from my experience, is that if you get a breakout, it just takes a very long time for it to develop, because this is not the key time for any of the markets right now. I mean, it's the Asian market is opening up and things are still kind of slow, but we're working with U.S. pairs. And this is a London, we've got the British US, so we're looking at a London pair with the US pair, and we're trading it during the Asian session. So even if we get the break, it may take a while for it to develop, but we'll see how it goes and see what kind of volume we can get and what kind of pressure we can get on this thing. So are there any questions so far? Am I going too fast? I'm trying to cover a lot of areas because this is an active trade for us that we're looking at. Once we're looking for it to break out the bottom or break out the top, and then we're looking for it to come down and get our 7 pips and get out of the trade. So I'll try to keep some of these indicators off and just use primarily just the the price action for the most part as best we can, just so we don't confuse too many people that are still trying to learn this methodology that we're doing. And I also, after I have the wedge drawn, I draw another parallel, and I just line it right up on top of where that bottom line is, and then I move this down 2 pips. And that gives me a zone that I'm looking at to be able to enter in. So right now this is at 134, 31, 34.2. I'm going to bring this thing down to 32.2. If I can do that. 32.2, we should be right about there. And this, I'm going to lock this. And we're going to make this a entry zone to sell. So what we're looking to do is having come. I want to close below the wedge. I hear you had a couple hits, but it didn't close below. I want to see it close below with a red candle, followed by at least a wick of a blue candle, and then break down to or another red candle, and then enter the trade. I'd like to try and get in this trade somewhere in this area if it once it breaks. And then my target's going to be down here. Now, the more this thing goes inside the wedge, the more likely we are going to be to hit our target, because the target's going to be right down here by where my D is, because that's the pivot low. And this is a zone that I would expect it to have a little bit of a issue trying to get through right around in this area, which you can see that's a 2 pip area. So that would be a good target. We try and go for 7 pips. But that's including the spread of the 2 pip spread, and that's what we have here, 2 pip spread. So anything over 5 pips profit is more than a good trade, and I'd rather take my profits a little bit earlier and maybe less give up a pip rather than give it all back because it just didn't quite make my target. I'm going to check and see what kind of moving average I have. And right now the moving averages are consolidating. And so that's a good thing. And we're starting to get this break on this, on the top of this wedge or the bottom of this wedge area. And we'll see if it can break through and give us a nice little down move. And so right now we just have to be patient and we'll wait and see what happens. You see it made a lower high, higher reference. Now here it made pretty much a little bit of a lower low. And here's a lower high, lower low, lower high. And now we're waiting to see if this thing can break this low here. And right now it's just going sideways inside this range. And the range between our C area and our D area is only 20 pips. But to the bottom of where this, as a wedge consolidates, we're looking at just about a 7 pip range in between the top and the bottom of the wedge. And so like I said, we generally use a 7 pip stop, a 7 pip target, and we just have to wait and see what happens here.
Excuse me, Al. Jackie requested if we could afterwards review the USD Swiss.
USD Swiss, okay, we can do that. Yeah, that was the earlier one. Mm-hmm. We'll go back to that one after. We'll see if this thing breaks here.
Right. No, I just wanted to.
Yeah, good. Thank you. Yeah, thank you so much. Let me see where that's going. Right. Yeah, that's inside of a wedge as well. This one looks like it's more apt to break out sooner. There's a nice candle that broke out. And we have 4 seconds. There's a close. Everything's weak on down here, weak on here. Showing the strength to the US dollar on this chart. And US dollar is getting more strength. Here's our blue candle to the, and we're going to see, so right now I'm looking for this blue candle. We have a red candle followed by a blue candle. And if we can get this, we'll see how this candle closes, the second candle. So I'm a little bit of trouble getting through this area. We have a lot of wicks along in here, so this could be somewhat of a challenge to get through this. But we'll see what happens. And if we decide to take this trade, I'll get this all set up to take this thing short. Let's see how this candle closes. Right now, that's only 1 pip. That's only half the spread right now. This would be 7 pip stop, 7 pip target. See where moving averages are on the higher time frames. And this is looking at maybe 31.30. I'm only seeing about a 3 pip range on this. I think I'm personally, I'm going to hold off on taking this trade just because we have this moving average down here that's right below the wedge at 31.29. And if we get in this trade right now, we'd already be at 31.30, and we have about 1 pip before we hit the target, the potential target zone. So I think I'm going to pass on this trade. And you see as it came down, we have the hooks coming down on the RSI, and you see how it didn't even get down to, even though this looks like a fairly good sized candle, it doesn't really have the downward momentum that I would like to be seeing right now. Let's see where this moving average is. If you do end up taking this trade short, which, I mean, the indicators are such that there is some British pound strength here, which is not a vote for a short. There is some dollar strength on these other 2 time frames. But right now, I don't think there's just enough room to make it worth taking the trade to be able to get these 7 pips out. It could come all the way down and touch this, which would give you the 7 pips. It would be tight to get that. Tell you what I'm going to do is I'll take this on a demo. And this is a demo platform I use just to show some examples of the trade. And we see a little bit of a basing here. So we'll take a sell here. This is the 7 pips stop. This would be, you see where the entry would have been filled as it was all the way up here. This was the entry with your 2 pip entry. And it's going to be close whether or not it breaks down enough to get enough out of it, but we'll see. A different time of day, I would be more apt because I think to be more volume and more volatility. But you could be waiting a long time to get your 7 pips on this one tonight. Any questions? Quiet group. As everyone's free to use their microphones, so it should all be allowed to Let me make sure you're all allowed to talk. It's got a little bit of a hit right here on the 5-minute exponential 62. It does have some strength to the downside here. A lot of times when you have the exponential 62 below where the target is or around where the target, a lot of times you'll get a bounce off of that. Now we do have it down here on the orange, which is below where our target zone is. So that would be a plus. We'll see if this will get the target here. The British pound has been very active here the last couple of days. If we have gotten in right here at the close of this very first candle, when that candle closed, we still have had to come down to 2 pips, so that would take us down to 32.2. And so 7 pips for 32.2 would be 25. We'd have to get all the way down to 25 to get our 7 pips out of this. So right now our fill is at 31.6, so 29.6 is 28.6. Right now we're only up 2 pips right now from our entry. But this is a potential area where this thing could come down into this zone. We'd have to pretty much come down and break the bottom of this D in order to get our target. Well, looks like it might make it. Starting to show some strength. The dollar is showing stronger. Good strength on the dollar to the downside. We have the dollar strong on all 3 time frames now. So right now this was about 4 pips. And right here, this vertical line, this is right where the next 15-minute candle will open up. So when you have a few more minutes before, we have basically about 4 minutes yet for this 15-minute candle. Let's see what US Swiss is doing here. US Swiss is still inside the wedge, so it hasn't broken out of that yet. There's a lot of waiting and keep sitting on your hands once you're waiting for trades or once you're into trade. Once you get in it, you have your target set, you have your stop set. As I use a 7 pip stop and a 7 pip target. Sometimes I'll move this stop on up to above the wedge, especially if it's a very tight wedge. I might give myself 10 or 11 pips. Anywhere between 7 and 10 pips for a stop is usually I usually find to be adequate. Sometimes you just have to give it a little bit more just to keep yourself out of harm's way as the price action starts dictating which way to go. I prefer to see all 3 of these moving averages in their proper order. The green is the 5 period exponential, the yellow is the 13 period, and then the purple one is a 62 exponential moving average. The green and the yellow on all 3 charts are always going to be 5 and 13. The color will change on the 62 exponential depending on what the time frame of the chart is. I've got an orange on the 15-minute. The 62 exponential is an purple or magenta on the 5-minute, and then on the 1-minute it's a white line. The only place where it's right now it's in the proper order from the slowest to the medium to the fastest is on the 1-minute chart. And right now, as long as they can keep on staying below this yellow line, you can stay in this trade and it still has potential of hitting your target. Once it breaks through and starts bringing this, start heading up into this zone right here, you could be starting looking at somewhat of a reversal or a stronger pullback back to the wedge, or even more so inside the wedge. And oftentimes, if you get a break on one side of the wedge and you can't get your 5 or 7 pips, a lot of times that's a good indication where it was a head fake and it will reverse. And then when it reverses on the other side, it becomes a lot stronger move.
Excuse me, Al, did you by chance say that the USD Swiss did not break out yet?
Last I looked at it,
Okay.
it did not break out. Let's take a look at that. Let me have it here someplace.
Jackie had asked that.
Yeah. Let's see, not that one. Here we go. Let's see. This is still the British USD. So I'll just put it on over here. Here's my USD Swiss. Let me see if I have it on a different chart. Nope, I don't. Okay. Let's take this one off right now. Let me put this a different chart on up here. Next 15 minutes. This one here, this is the chart we want to put on. So basically with this one, the way I drew the wedge on this is that it was the alert was at 8:15 tonight. So this is all East Coast time. And the Swiss was, oh, we just got another alert on New Zealand USD. We'll take a look at that here in just a second. Okay, let me go to the New Zealand USD and see if there's anything that we need to be looking at with that one. So let me get this one up here. Well, that's a fresh alert signal. New Zealand USD. Ooh, look at that. Clean up the charts, start with a fresh chart. Start on my 15-minute chart. And it was an ascending wedge at 10 o'clock. So I'm going to mark my 10 o'clock. Ascending means that it's moving from low to high. So I'm going to be looking at, I'm looking for 3 pivots that might be in alignment to as close to the wedge as I can. The alert was here at this red candle, ascending. So I'm going to start with my tool and I'm going to start back here, trying to find a significant pivot low, go up to a pivot high, a pivot low, lower high, and I'm going to see if I can get a trend that will make sense from an anchor to this little trend line and down to about to here. So here's a hit, here's a hit, here's the anchor. This is about as close as I can get to the wedge, where the wedge alert was. And actually sort of broke out right at the alert. Actually, it's already breaking out. So I'm going to move this all the way down to here. And I'm going to just kind of leave it like that. Right now, I don't have any hits along the bottom. Don't really have any hits along the top. But I'm going to be waiting to see if this thing will go and see if it breaks out on the inside. I'm going to move to a 5-minute chart and tweak this thing. Move it to a 1-minute chart and tweak it a little bit. Make it as tight as I can and as accurate as I can. So at the 1-minute chart, I'm going to move it over here to this pivot high. We have a nice little trend down like that. Coming over here. And I'm going to find out where my A is. So go all the way over here. And I'm going to slide this over. And that's about as good as it's going to get for right now, I think. With an ascending, it's already had this nice little move right up here, but before we got the alert, it's already past that. So I have to go a little bit wide, longer and deeper to be able to get something that makes sense. Because if we just use this trend line here, then the move is probably pretty much already out of the chute. Instead, we used even that one too big of a hit here. Now I could take this, move it down. I could take this and move it up a little bit. So here's a hit. This would be about as good as I could get. But you see that's already way out of here before we even got the alert. And we've already given up, before we even got the alert, and we've already given up, let's see, about 48 to 38. We've already given up 10 pips before we even got the alert. The alert happened on this red candle. So at the very best, it would have been right up here when the alert came in. It's already out of the chute here. Now, it may give us a chance to get back into it as it breaks out of the bottom if I use that line. Jackie, I see you have a question. Or is that an old question?
Old question.
Old question, okay. And let's see, now with this, I don't like it when we already have it broken out of where I would be drawing where I like to be drawing the wedge before we even get the alert. That's like here's a pivot. Now it must have to go all the way to this one. But since it's already broken out, I've got to go to the next level. I could take it on up a little, since there's really no hits at all along here. I could just move this on up. I just tried to draw the wedge at something that makes some sense. And once it breaks this level, which is already broken, it's pretty much right at this level right here. When you go to take the trade, you have to make sure you have enough room to have a target that makes sense. So once it breaks this line right here, the next area of interest would be this area right in here. So we can draw that out. Slide this thing over top to bottom over here. So if it does break this, then the question is, do we have enough room to get some movement down to this one? And from here to here is just a little bit over 7 pips. But I said we weren't able, unless we can get a nice retracement back towards the wedge, this trade there isn't enough room for me to take this trade. And I said, once we have the wedge drawn, I said, ideally, I'd like to see an anchor, a hit. This one's a little bit high, but it still could almost qualify. It's 38 to 36. It's within 2 pips, so I could almost qualify that as a touch of this trend line, or at least it challenged it anyway. But this was definitely the break. So I'm going to make a put a target of 2 pips underneath here. And I'm going to slide this down 2 pips and just see where we are in the scheme of things. 37.7, so I'm going to go to 35.7, right to this area. And if it comes back up and re-challenges the bottom of the wedge or this trend line, it may give us an opportunity to get in if everything's still looking strong to the downside. Let's see how our British pound's doing. Yeah, it's coming up it came pretty close to the 7 pip target here. You see it came in, it wasn't enough to get me through to take the target out yet. And that would be close enough to where I would just go ahead and take this off and just take my profits on that. And be happy with that little profit there. Now let's go back over to this US Swiss we were talking about. It just broke out of the top side here. It just broke out, came back out, and it's retesting the wedge. We have 3 green. It's all strong here. We have the US dollar showing strength. US dollar is the first currency of the pair. And this is on the 1-minute chart. Let's see how the strength is on the other 3 charts here. Dollar is strong by 3, strong over here, strong over here. We can take this trade as it's touching all the moving averages are in the right direction. And we can take this trade. Let's see if we can get in here to a buy. Change the broker. And the brokers, I gotta get my broker set up here. Every time I switch charts, I have to reset this thing. And we're going to modify this for 7 pips. So here's our entry, here's our target. And so we had to be quick on that one. We have some strength. Let's see where we are here. Let's see where our fib lines are. And here's where the target is. And as we looked at our 15-minute chart, once we broke the wedge, this is the target that we'll be looking at right up here, and which would be right up here on this. This is a 30-minute 62 exponential moving average on reference to a 30-minute chart. Once we had the break over here, we're looking at it to pass through this DB trend line. And if we can break through this D area, then the next area is going to be pretty much up to, well, let's see, we got the B right up here. This would be the first area that I'd be looking at. And if we got into this thing at 08, let's see, 88, this is only 3 pips. So once it breaks through here, here's our 7 pips up top. Let's go to a 5-minute chart. We'll look and see where this thing is here. So once it breaks the wedge, this is the first level it has to get through. If we get a close above the D, which is at 90.89, we got in at 90.87. Again, that's only a 2 pip. It's not a lot of room, but if we can break through that, then we're looking at this area over here where the, go to this one. Here's where the B is, which is a little bit right up a little bit, only 2 pips above that. And then after that, it comes up to this area right in here. This would be the most reasonable target for this thing to hit up. But it's got a little ways to go, and let's get through this area, the B area. Basically, has to get through all this wick from this wick that's between D and the B. Here's where the body of the candle closed. And you take it over here to where the wick is. This is where the sellers were. This is where the original move down came in, came up and retested that zone, came back down. Now it's coming up to retest the zone again. If it can break through here, then the next area of operation is going to be in this area. This would be areas where we'd be looking to sell, or a target, basically. Any questions?
None in our messages, Al.
Okay. Quiet group. Now, I don't like the fact we had a nice red candle with a big wick, followed by a blue candle with another wick. So there's not a lot of volatility here. And these are only 2 pips apart, or 1 pip apart. There's the one I wanted. And we wait. Let's see how our British US trade's doing. Still sort of fighting here. It has a nice little, this is a nice little flag right here. It's only on the 1 minute chart and it's only about 6 pips wide. This could give me a good indication that it might actually go and create, get that stop, that area where we were looking at for a target. Came right down to where the D was. See, we came right down to that level and then just stopped and retraced. But once we can get a close below this level, then the next stop is going to be probably down here. This is a nice big little, this looks like a candle with an announcement of some sort, possibly right at the very end of the day. It's right by the daybreak. It's right when it opened up, it had a lot of volatility right there. So we'd be using this for a target area. And this one's already been pretty much challenged. Now, once that one gets broken, once you get a close below there, what I do is I'll take this horizontal ray and look and see where all the wicks are. I come over and I see that just comes into more wicks. Keep going until I get out of the wicks and it hit a body. And right there is the end of the wicks. Yeah, this nice strong blue candle. This was the lowest wick that it had that wasn't challenged yet. Once that gets broken and closed, it's coming. Then we look at it's coming all the way down to this level right in here, and then this would be the next zone.
Al, I have a question.
Sure.
Now, if your price retraces back up to where we took the initial trade,
Up here,
yes. Now, would you consider re-entering it because it did not reach your area there? Just shaded, or would you just feel that it's?
You know, I would probably, with just the volatility that we've had, if we had like a really strong move down, yes, and a couple strong moves down, and it came back and retested, then I might be more apt to take it. But the fact that it's only gone down right at 5 or 6 pips, that just tells me that just there isn't the volatility that's going to drive it down even further.
Okay.
Now, in the morning sessions, when you have when you get like around 10 o'clock or 9:30, when we start getting the markets are opening, then it might be a time to take it and take it on the second bounce. But a lot of times, what happens is, if it breaks and you only get 5 pips, and if it comes up and retests, a lot of times it goes and takes it off the other end of the wedge, and that's when, and then it takes off for a nice big move. So this could just be what I call, this would be the head fake.
Mm-hmm.
And in fact, I saw one today that was actually when if you drew a bottom line from like here, was not that one. I had a ray from here to here, and it came up and it broke this. This was almost like a little upside down head and shoulders, mm-hmm, where it came down, it came up, broke, came back, retested this, and then it took off to break to the other side and just kept on going. So I've been paying a little bit more attention to that type of scenario, especially when you get just a really tight break on these things.
Now, is that on the USD JPY? that we
That
had?
was on the USD JPY today, I think was when we took that one. It broke out of the top, head fake, came back down into the wedge, and then it just kept on going. Had a nice little drop down.
Mm-hmm.
And so I'm seeing that more and more where if you can't get, you could take the trade. A lot of times you'll get your 5 or 6 pips, but that's all you can, but you have to be right on top of it to squeeze it out. And then it comes up and retests the wedge, goes back into the wedge, and then breaks out the other side.
Thank you.
So that's just something I'm starting to notice more and more as we draw these things. Where's our New Zealand trade here? The U.S. Swiss we were in. Was that U.S. Swiss we were in? Where was that? Here it is.
US,
Yeah, U.S. Swiss. Here we go. Here's so it came out a nice little candle, strong candle closed up in, wicked up. Let's see if we had 2 pips there. From here to here. Move this thing up. Let's see, that's at 90.86, so 88. Right about there. Log that for entry to buy. Came out wicked in, came up, got a red candle, followed by a blue candle, but it just head faked you there. But our moving averages are still in the right order on the 1 minute, or this is on the 5 minute. Our moving averages are still in the right order on the 5 minute. The strength is still strong to the dollar, not by a lot, but it's still showing stronger. This one's showing that it was like a pullback, and this one still has the dollar. Dollar is the first currency of the pair, and that's showing the strength to the Swiss by 5. So you'd want to be trading this to the upside with the strength of the dollar. I'd like to see this thing flip back over again and give us 3 green bars. And we'll see. If I look at our fib bars on this US Swiss, see if I can find them. It needs to get over here on the 2 minute. That's better. I just see it. I figure once the let's see how far apart. These should only be 7 pips apart. Yeah, these are 7 pips apart. We had a nice little break above the. This would be our target area that I'd be looking at for this thing to break up to. It challenged it right here, but I think looking to see it get up to this fib line. We may not get a lot of pips out of it, but we'll see what happens here. As this slopes down further and further and breaks again, it will be more apt to get our target up in this area. Actually, that's where the entry was. That's where, yeah, what's the spread on that? Almost 2. It was getting some higher highs and higher lows, higher highs and higher lows. So it does have a little bit of a trend going. And when you start seeing, especially if you're in the trade, when you get in the trade, if you get in on this break, you can start looking at try and find a trend that it makes sense to be able to have it follow. And usually the moving averages will do that. But oftentimes what it'll do is it'll start to trade in a channel. Have this little hit here, have a hit right up here. This is a nice little channel that's starting to develop. And you're looking to see for it to just go from side of the channel up, side of the channel back, higher high, higher low, and just see if it'll keep trending on that direction until it finally breaks one of these, or you get your target. I'll make this one red to the downside. We don't want it to break down below this one. Obviously, we go like that. This little bit of an overshoot area if it breaks out, as long as it doesn't close below. Right now it's following, it can follow this 1 minute exponential 62 moving average. You see on the 5-minute chart it's following the 13. Everything's in the right direction. We have the 62, the 13, and the 5. We had the breakout of the wedge. I'll take this off right now. And we'll see what happens. See, it had a little bit of a breakout down here, a little breakout up here. When the world financials start going a little bit out of kilter, a lot of times the flight to safety is the Japanese yen and the Swiss franc. Is oftentimes currencies will go to put money in the Swiss franc and the yen for safety when the dollar is when the dollar becomes so volatile. And the dollar has been very volatile lately. How's our British trade doing? Didn't quite make it down to our target. Now it's coming back up to retest. Sort of respecting this little trend line right here. But it's just kind of all over the place with wicks. Nothing real directional here. So this is a tough time of the day to trade because there just isn't a lot of volatility. A lot of volatility happens after about 2 o'clock in the morning East Coast time, just before the London session opens, near the end of the Asian session. You'll see a lot of alerts sometimes between 2 and 6 o'clock, and then a lot of times it just dries up. Well, like we're getting a little bit of a basing right here underneath the wedge. We have a nice blue candle, it wicked up, came back, red candle, blue candle, red candle. Now we're getting a blue candle. Coming back in, see if we can get a close inside the wedge again. Our strength is to the dollar, which is the first currency. And let's see, we have fib line should be a 5 minute. You may wonder why we use 7 pips. If I use these Fibonacci price lines, you'll see that on the 5 minute chart, the blue line to the red line is 21 pips. If I go to the 2 minute lines, they have you get 3 lines in beside those 21, and each one of these are 7 pips wide. And I'd like to see these zones because a lot of times the price will go between the blue to the from the red to the blue to the green to the red in that sequence, and they're all 7 pips apart. And you'll see the price hangs out between those 7 pip range. It breaks through and then goes up to the next 7 pips. And that's one reason why we use 7 pips for our targets and our stops. I like to see it when it breaks out the wedge, if it breaks out somewhere around one of those Fibonacci lines. In this case, it's right at the green line is right at the top, blue line is right in between. So it's right in the middle between the two. Here's the green. This one right here, here's the green line. Here's the blue, here's the green. And you can see the price is right about in the middle of the whole thing as it's trying to break out of the wedge. How's our British trade doing here? Take a look at that. And you'll see it's still kind of basing along in here, not really going anywhere. And it could go like that for a couple more hours before it finally breaks down or breaks to the upside. Looked like this gave us a little bit of a head fake, and now we're looking to see what it's going to do about we have our stop pretty much down here at the other end of the wedge. But it did make higher highs and higher lows on the way up, and now we'll see where this can break through this area right in here. This was the area where this blue candle started. This is all the area where it started. Here's a wick. Here's the top of the red candle that got broken. Here's the blue candle that broke this. We had a nice little trend coming down. And we have blue candle that broke and closed above, and actually closed above all these. So this is the area where this move originated. And all what's doing is retesting this area. If it can break through the bottom of this, then I'll be out of this trade.
The bottom of the first green line out, or the box?
Bottom of the box.
Okay, thank you.
Because once it breaks this series of wicks over here, this series of wicks on the bottom, once it breaks that, it really has no place to go. Because if you come over, if you look, let me get my little ray here. If you have your ray, right, here's your, it came down. Let me get this one out of the way. And this is the bottom of the wick. Came over here. This is the bottom of this nice big blue candle. Come down. Now you have the series of wicks. Here's 1, 2, 3, 4. There's nothing to stop it until you get over to here where this big blue candle is. So what I do is I put my box pretty much right at the bottom of these wicks. You can even put it to the bottom of the body, the lowest body of where the wicks start. Because that's basically what's saying is that there were some sellers that the buyers came in, it got down this low, and the buyers came in, start pushing it up. So here's where the buyers started coming in first, but they didn't come in until all the way over here, where there weren't any wicks, and just came over here to the body, and there really isn't any wicks along here until here. So this whole area would be the next area. Once this gets broken and they get the close, this is where it's probably going to go, because there's really nothing to stop. There weren't any sellers in here to make that difference. You can see that this is wick. I mean, this wick came right down to the body where this body of this blue candle was, and so right here is where all the buyers came in. Is where the demand was. You can see it starting to come back up again. So here's where the buyers are at. Here's where the buyers came in. Came down here. The buyers kicked it right in. Said, "Okay, there we go. We're going to take this off again." Now we're going to have to be concerned about where the sellers are. There are some sellers right up here at the top of this blue candle. The sellers came in. Buyers fought a little bit, then the sellers took over. They took over until it came down here, and there's where the buyers said, "Oh, nope, we're going back in again." And now it's going to come up and probably start challenging, looking for this green line up here. And we'll see. The RSIs are coming out of the 40-60 zone. The blue one's coming up to the 89. You may get a little bit of a hook, but if this hook can stay and without this orange one coming back into the zone, then that'll just be a short pullback for a bigger move to the upside.
And your RCSs have switched.
And the RCS are still showing the RCS is showing the dollar strength here on the, this is the 1 minute. Let's see what it looks like on the 5 minute. Oops. I can find where my chart is here. There we go. And you look on the 5-minute chart, we'll see where that is. Dollar strength by 3, that's good. And here the dollar strength in the 15-minute by 3, that's also good. So this is telling me that this thing is, I like seeing when it breaks the wedge with a 3-point spread on the 15 or more. I like seeing the US dollar being at a 5, 6, or 7. 7 is the highest number it gets. Right now, there's only one other currency that's stronger than the US dollar right now. And that one would be, on a 15-minute chart, is the Japanese yen. So right now the yen is the strongest, the dollar is the second strongest. This is on a 15-minute chart. And on a 5-minute chart, the dollar and the yen are the same. And that's why that tool is so valuable. It can tell you where it is reference to all the other currencies. It's starting to show some strength now. Right at almost 11:15 at night. We're going to be done here in about another 15 minutes, so we'll see if this thing can come in and get profitable here. But it took a while. You figure this alert came in at 9 o'clock, 8:15, and it's almost 11, well, it's 10:45, so it's 2 hours and 30 minutes to really show with the significant break. There was kind of a break here. But we'll see if this thing can, it's a nice little move up. Now it's starting to retest the wedge again. Runs into a little bit of problem around this 87 level. We had all the crossovers of all the moving averages right down here inside the wedge. Now it's just retesting. A lot of times, once this thing starts to really move, you'll see that the 13 moving average, not so much on this one, but a lot of times the 13, on a strong move up, that 13 moving average is a nice little trend line to follow, that it doesn't, price will usually stay above that on a strong move. These are not real strong moves right now. Seems like there's some buyers that keep kicking in right around this area, or some sellers rather. It's having a hard time closing above. And I want to see a close above this candle, this blue candle right here. Once we can get a close above that, then we can maybe be off to challenging some of these areas up here. So this still has a little bit of pressure to the upside on this.
And that's because the RSIs?
Exactly, yeah.
Okay.
The RSIs, and also, now the whole moving average isn't confirming that. But you can see where this was green most of the way, and they had, if you look at the color pattern, actually something's not right with that. This is one I probably forgot to change. Let me just check this out here. Yeah, this one needs to be at 15. You can see where here was mostly red on the downside, mostly red, a little bit of green, mostly red, a little bit of green, red, and now it's starting to show a lot more green, a little bit of red as it's going to the upside. that helps a little bit to see where the pullbacks are, where the trend is. It hasn't really reversed from this C area. It really hasn't really reversed significantly back to the red area. But I said this is just not a real strong time of the day. This pair it's been a really good pair for the most part. It hasn't been that strong this time of the night, although I have seen it be pretty strong. How's our British doing? Same thing here. Is this still going sideways on the British? How's our New Zealand trade doing? We had a New Zealand alert. It broke out of the bottom, basing right here. I almost forgot about that one. Had a break out of the wedge. Basing, it'll probably drop some more. And we have dollar strength, dollar second currency of the pair, dollar strength by 6, by 6. I would expect this thing's going to hit this target. Take a look at this tomorrow morning when I get up and see how it looks. One thing I don't like taking trades, live trades this time of night in the evening, because a lot of times they really don't materialize until the wee hours of the morning. And so I try not to have open trades before I go to bed. And we'll be back here at 8 o'clock in the morning tomorrow morning for another session. Anybody that would like to come and join us.
And Al, your nighttime Hawkeyes are only on Wednesday night, correct?
That is correct. We are going to be having some. We are getting together with another team member to have some more sessions in the evening for about an hour, but we haven't started those yet. Actually, we've started them, but no one's been coming in, so we're going to have to reorganize what we're doing with that. But this is the only nighttime session for Auvoria Prime that they sponsor.
Just in case the other people in the room need to know that.
Yeah. And Christine, I appreciate your help this evening.
My pleasure.
Looks like we have about 10 more minutes. Last chance for some questions. Anybody left that's still awake?
Mm-hmm.
It hasn't been an overly exciting evening. Well, we had one trade here with the British US. That was a nice little trade. Looks like it's still kind of working. It still had a little basing coming in. All the moving averages consolidated again, and now they're back in the right order on the 5-minute. And it's coming down to retest the zone right here. This is actually a demand zone. I'll make this green. Still, like I said, you can see why I hesitate taking it, because it just really didn't go you just don't have a lot of movement this time of night. And that was like 9 pips. So if you got a really good entry, you could have gotten your 7 pips or your 5 pips out of it. Same way with the US Swiss. Right now, it's just struggling to get back to break even. Although I think it may do it. There is some strength to the upside on this. And they're only about a pip and a half away from break even on this. And we have about another minute and 30 seconds for this blue candle to close. If this can close above this yellow reference line, that'll be a good thing. Take this off, take this one off. And so we're looking for we have this, again, like we said, once we can get through all these wicks, the next stop is going to be up here into this red zone.
Now, Al, that blue line that's just a hair underneath your yellow dotted line, is that
this one here?
No, above?
This one?
Up a little bit, down a little bit. Right there, right there.
This one?
Yes. Is that a fib blue, or is
no?
That...
Actually, that's the price. That's the price blue. That's actually the candle. That's actually the That's actually the.
Lady. Sorry.
No, it's. I look at that all the time and say, well, where's it? But yeah, it's that's basically the price.
So in class on a humorous note.
Yeah. No, it's not a silly question. Trust me, because I look at that sometimes like, where that line come from? Because these fib lines don't always line up with where the number. I mean, right now this one's lined up and this one's lined up. Or actually, that's there again. That's your price line right there. Right? Mm-hmm. So it's not a stupid question. But a lot of times, if you depending on how fast it is, you'll see that sometimes where this little box is, it tells you what the value is. Mm-hmm. It's actually way below where the line itself is. Okay. That's just one of the natures of the beast with that. Mm-hmm. Oh, thank you, Anthony. I'm glad to have you come. Let's see. Numbers to use. Should I go back and what tips? One thing, if you're new to the Forex, I would highly recommend you go through some of Daisy Duncan's course on the Forex. And then the best thing to do is we record these sessions. So what I would suggest, we record them and post them. Go through the sessions we have during the day, and then come in here and ask questions. That's what we're here for. We're here to help you get some clarity about what we're doing and how to understand some basic fundamentals of price action analysis. We try and do a lot with just the price action. We do use some of these indicator tools like the RSI and the whole moving averages and the tools the moving averages. We do use those to help us make the decisions of whether or not to take the trade or where our targets may end up being. But TradingView has some tutorials, and then just keep coming in and ask questions. We're more than happy to answer them for you. We're glad to have you. And I think as soon as this thing gets up to that green line, I'm going to be going to bed.
Mhm.
And get ready to do it again tomorrow morning. So on that note, right now we're looking, if you're in this trade, be looking at, I'm looking at 90, 0.9089. That's the screen line right here. I'm looking at that for a target or within about a pip or so on either side of that. And that's going to be pretty much right where we got into this trade with the spread. But, and there's a good chance this thing's going to go, I would say there's a very good chance this thing's going to go a lot higher before the end of the evening, before the night is out. It could very well just follow this moving average. This yellow moving average, you could follow it all the way up to, I would not be surprised to see it get up to this area of the 90, 96 area. But it probably won't get up there for a couple hours. Although once it starts, it could just keep on going. We didn't get this candle could close. So we're on the 5-minute chart. In one more minute, this thing's going to close above this blue and coming right up to this green area. Once it gets into this area, I'm going to be taking this trade off and going to bed. And on that note, everybody, I'd like to thank you for coming in.
Thank you, Al.
Yeah, stay green, stay patient, and don't get greedy. Just go for your 5 or 7 pips and be consistent with that, and you'll be glad you did.
Have a good night. Thanks, Al.
All right. Good night. Good night. Thanks again, Christine.
Sure.
And good night, everybody.